So today I want to look at CISCO. Last week in our Yahoo stock charts forum, Market Wizzards, I had sent out an email indicating that I had noticed what appears to be a double top forming on CISCO, and that anybody long might want to consider taking some profit. Now, the potential here is when I spotted it, now we're starting to look a little bit more like that's going to happen. And one of the members wrote me back and asked about where's a good place to put a stop with so many different indicators out there, Fibonacci's, what have you, what do I use? And so I thought, well, here, I'll put together this video and we'll look at a few things that I think are key when identifying a trend. First of all, we draw our trend line from the low. We know here we've established a trend with higher lows, and we'll also see that there's higher highs. So we've got an area where 1, 2, 3, and that's what I like to see on a trend, is at least a minimum of 3 tags of the trend line, and now we're coming on 4. What happens in a trend is the buyers are we can see when the buyers come in. Now we would expect buyers to come in here. My concern is that that's not going to happen. We've got a stop and reverse that was triggered today on December the 14th, as this is the closing stock price on that, and we can see some volume picking up here. So, and also our momentum indicators are kind of leaning to the downside. We've been in a downside here for a while. We've got a very strong move here on the ROC, which is taking this tricks, and we're getting a bit of a hook here. So that hook is telling me that we're not going to come around and reverse this. And we can see here that the check and money flow, which has also been negative, has also broken that negative 0.10 line. So that's an indication here that there's some strong distribution in the works. So let's go back to our trend line. We've got here, this would not have been a violation because we opened up lower, finished higher, so we didn't breach the trend. Now as we get up above here, we get this golden crossover here on the moving averages, and I like to use exponential moving averages myself. They move a little bit faster, and the signals for me come a lot quicker, and for me they work a little bit better. Let's look at something else here just so that we can get a perspective on the expectations. So we're going to draw from our high here across the top, and we've got what looks to be here a triangle, a top triangle, and if we break that, then we have then a down. Well, there's 2 possibilities here. Let's have a look at this triangle anyways. 1, 2, 3, and we're tagging on 4. Usually when you move within a triangle, you're going to get the 4th move is going to be the signal, and volume is something that's key that we want to look at. And of course we got that volume today, so let's put that in here. And then the stop and reverse, that also was triggered today as well. Now, we took out the median of the Bollinger Band, which is this purple line here. That's our 20-day simple moving average, as the Bollingers are a 2 standard deviation from the 20-day. So my expectation is that we are now going to move to the other side of the Bollinger, which is typically the case, and at this point it's 1744. Given the momentum, which appears to be picking up, I think that we may, for sure, we'll test out that 1729. That either presents us with an opportunity to buy, because we have established here a good 150 days is a longer term support line. That's usually another opportunity, but because we're breaching this trend line, I think we go lower. And the reason I say that is typically when we take out a pattern, either this being a double top or a triangle, I usually like to take my Fibonacci's as a measurement of a potential area, and this is all really I'm going to use the Fibonacci's for on this at this time, is to get a sense of my target. Where are we going to go? So I'm going to draw from a 50% retracement from the low to the high, and because of the inbound trend, we're all going to be able to see here that 15, 16, I don't know how clearly you can see it here. That's a little right there. So about 15.20, 15 and a quarter is our potential target if we take out this Bollinger here and continue on the downside. Like I said, if we hold here at the 50%, buying comes in, then we negate the pattern. But if we break below, we take out the apex of the double top. Taking out the apex of the double top completes the double top pattern, and we go twice the distance from the high of the from the low to the high, or the apex of the high of the double top pattern. And so 15.20 is approximately our target. That's when I would look to get back in, because if we extend this a little back further, we can see there's a lot of support right in here. Right in this range here, there's some support, and this would be a key buying opportunity. Again, I don't want to go short here. You could, and depends on your level of risk excitement. There's certainly potential here that this does go down. I think the probability exists more to the downside than the upside at this point, as we can see here by these indicators. So always be willing to learn and know when to get in, know when to get out.